So as you can see here, guys, on this live account with GBP, today's pattern has already played out. Today's pattern has already played out. We can have a look at yesterday's. Let's take a look at the last 3 days. Look. So look, price corrects, consolidation, fake move, long sustained run, levels off for a continuation run, price corrects, consolidation, fake move, and the double bottom, long sustained run, levels off for continuation run. Now this here is an emotional candle. So when he pulls this back, this is to do one of two things. This is to either hit your stop loss if your stop loss is too close, or it's also to make you get a fright and close the trade. Because if your stop loss is here and it hasn't been hit yet, but he pulls this back, you think, oh no, it's going to hit my stop, So you might look and you're only in $5 profit, right? So you're going to click out, you're going to take it, then he's going to run it off and you're going to say, oh man, I could have been in $50 profit if I just held it in there. Hey, that's his tricks. This is just an emotional candle. But the point is, well, how would you know if it's just an emotional candle or it's the real run? Because this is the long sustained run, right? And it's very rarely that he's going to pull this long sustained run and not take it to the 200. He can pull it back after the 50, but it's very unlikely, you see. Look, after the 200, up until and just after it gets rejected at the 200. You see what I'm saying? So that's just an indicator to me that it may be an emotional candle and that I can just ignore it and then let it carry on. And you can see when it's here, it's still got a long way to go to being oversold. Okay, so let's move to today specifically. So look, you can see here, long sustained run, boom, price corrects, consolidates, fake move, long sustained run. And this move already happened, guys, before we had woke up. By the time I woke up this morning, we were already on this candle here. So you're too late. Look, it's already massively oversold by this point. So you just wouldn't get into this trade now. And who cares? You haven't lost any money just because you've missed a trade. Let's have a look at yesterday's. So here's the previous day where I marked it up and it came back down running. Here is where I marked the box up yesterday, and you can see it went straight past where I had highlighted it was going to go. And I don't mind showing you this. You know, I'm not the type of trader who's only going to, you know, show you the things that work in my favor. I'm also going to show you the ones that didn't work in my favor, and then I can explain to you things that may have happened and why. This is generally the result of news in the market, guys, and this is why we set a strike zone. So a strike zone doesn't mean that, oh, the minute the candles hit my strike zone, I'm going to get involved. Not at all. A strike zone is an area that you set up that you are going to tell your eyes to kind of prick up and start looking in to see if there's anything happening here, any candle patterns. Is this forming in here? You know, is there going to be a top pattern forming in here or not? In this case, there wasn't. There was loads of news yesterday, and there is actually loads of news happening in the market today, which can cause these runaway moves. But you can see here we've got it here. Price corrects, consolidation, this pin here, guys, is the fake move, believe it or not. And this is why sometimes you miss a trade, because it's not very clear. I mean, I've been trading for 6 years now, and it's not very clear that this is the fake move, all right? So you just have to look at it as if you're a kindergarten child sometimes, okay? So, but this is, now that you can see it here, this is what's happened. The price is corrected, consolidation, fake move, long sustained run, levels off for continuation run, gives us a beautiful candle pattern at the top here to pull this back down. And here, sorry, I keep forgetting my thing with touchscreen. And then it pulls away on a pullback move. This may have been news as well, guys. This is a straight away move. It was just so overbought. This could have been news. I'm unsure. Oh, yes, there was news last night. I'm sorry. There absolutely was news last night during the night. And that is what's made this big, massive straightaway move. So then we come back up. Price corrects, consolidates, fake move, long sustained run, levels off for a continuation run. Continuation run, guys. I mean, you can see this in every trade. So this is GBP USD. If we look at Euro USD, it's going to be pretty much looking the same because they're positive correlation. Positive correlation means they move in tandem with each other. Look, it's the same. Look at the pattern. It's the same overall. I'll jump back. Look, GBP USD. Look at the pattern, right? And Euro USD. Look at the pattern. Look. They're positive correlation. I'm going to show you what we call negative correlation. And between GBP USD and Euro USD, the one that's negatively correlated is this one here, USD Swiss franc. So the pattern's going to be the same, but it's going to be flipped around on itself. Okay, let's have a look. Now, see? Down, down. You see? And I'll flip it back to USD. Up, up. You see what I'm saying? So you can actually use USD Swiss franc and Euro USD and GBP USD as an indicator as well. If you have loads of indicators, right, telling you, excuse me, that, for example, Euro USD or Pound USD is going to go long, then you can also check here. If you look on USD Swiss franc, and it says that all your indicators are telling you that this is going to go short, then happy days. It's just another indicator that you can use to clarify that this has the highest probability, okay? Remember, it's not guaranteed. It's based on highest probability of these two going long. But if I'm looking on these two, GBP USD and Euro USD, and everything's saying that it's going to go long, and I look on USD Swiss franc and I do all the calculations and all the working outs and blah, 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 and then my final conclusion is that this also appears to be going long, then something is wrong in the market, guys. It can happen, it's very rare, but that's then an indicator for you. If this is also saying you this is going to go long, and these two are going long, then something is wrong in the markets, and that's a warning sign, all right, that you maybe just want to hold back on that trade for the day, but that call is your call. That's entirely up to you. Look, you can see it again here. Price comes up, here we go. Look, price corrects, consolidation, fake move, long sustained run, levels off for a continuation run. Price corrects, consolidation, fake move, long sustained run, it levels off twice for a continuation run. So you wouldn't get into this now because you don't have a good price. You want to try and get in between the third and fourth candle, and your stop loss is going to be around here, a couple of 10 to 13 pips above, and then you want to have a good run. Why you wouldn't get in here? It's already had quite a decent run. It's already bang on the 0 pips away from the low of the day, so it's already the low of the day. It's already broke through the 800. It's coming to the 200, and at the TDI, it's already oversold. So you would never get in this trade just now, because how can you get involved? How can you sell something that's already oversold? If you don't have anything left to sell, then how can you place a sell order and expect to make money from that? You can't. And the rest of the moves for the day are just going to be bounce around moves like this. So you're essentially setting yourself up to get trapped in the market. All right. Don't forget to follow us on Facebook, YouTube, and Instagram on The Trading Guys. And I'll put a link below where you can join us and set up a demo account if you wish, and you can practice trading. And I'm going to give away, I'm going to give away heaps of golden nuggets and free training for you guys who wish to practice on a demo or a live account. All right, take care, guys. Bye-bye.